Thanks for the opportunity to present the Toubani story here today. I'll try and make it as succinct as I can. I know we're running a bit late and people are keen probably for a coffee break here. We're on a mission. This company's on a mission to bring the Kibata Gold Project to life. These types of gold prices at this point in the cycle, this is the opportune time to bring assets like ours through the pipeline, and we're trying to move as rapidly as possible as we can, and I'll talk about what we're doing here. We're going at quite some pace. There's a hive of activity going on at the company. We're drilling, we're investing in our people, we're investing in our local communities as we accelerate towards a final investment decision as soon as possible. I like to think our proposition is as simple as it can be in mining for investors. We have risks just like every other company that's been up here the last couple of days, but it's how we're managing those risks, which I'll talk to later on in the presentation. But there's a host of attributes in our favour here, and the common theme that you'll hear me say is this project is simple mining, simple flow sheet, and a remarkable economic profile, and not just because gold's $3,500, but even at low, these economics, which I'll show you in a second, are at $2,200. It's a compelling project, and it's a compelling value for our shareholders, and it's why we keep marching forward through all the noise and the headlines that you hear and see on Mali. I'll talk to you about our approach there. And then when you couple that with our partners, we did a recent deal, we've really put the building blocks in place to finally bring this project into development. So for me, Kibata has a lot going for it, just at a high level here. Scale, relatively low capex, low cost, high returns, strong paybacks. I consider these types of numbers company making, company defining. That's what excites us at the company. And our job is really to realise that value, that value for share and for all our stakeholders. So I'll reaffirm, and I'll talk more about this in the coming slides, that these economics are on Mali's new mining code. There's always this conjecture about changes to countries' recent mining codes. We've engineered this project to be compelling on those latest mining codes, which really reduces risk. So on a corporate overview here, I would say we have one of the strongest institutional registers in small cap land. Our market cap are around 120 million today. But some of those key holders here, and we've got institutions running deeper than those names. These are guys sitting at basically 10% or more in the company. So we're well funded here to accelerate our progress and bring this project forward in the coming months. We've got a very well-credentialed board and management team. I won't name them. I think some of them will be recognised in this forum here. This team's growing at pace. We've got a whole Kibata Gold Project team expanding here in our offices there in West Perth, led by Russo, who recently joined us, our most recent hire. And in my view, good projects attract good people, and that's what we're building in the company. And certainly culture is something we're fixated on in the organisation. Our recent transaction that just closed just last month, it was a $15 million investment for 18% of Toubani by A2MP. It also came with a non-binding debt commitment letter of $160 million US, which is more or less the level of debt we're trying to finalise here for our project financing. So we're working to advance that now into a binding commitment. I'll talk about that as well. But the benefits of that relationship or that partnership is there, as you see. Really, it's on the financing and the network that A2MP bring. And more information here on A2MP. So A2MP is Eagle Eye Assets and AfriExim, supported by AfriExim Bank. Eagle Eye are a family office in Dubai. They've got some other ASX investments, Canyon and Prospect, I believe they might be here. And in Mali specifically, Eagle Eye got a growing presence in the company. So for us, this is really a complementary partnership, puts us in a very strong position in country. We've got their network and their financing capabilities coupled with our execution capabilities. So to me, it's a very powerful combination. Has really set the foundation for us to move this project forward. It's the ideal partners. And then just in Mali, on this audience, I think must be a level of familiarity with where we are in Mali, but we're in southern Mali here. It's clearly a significant gold producer, second largest in West Africa. I'll talk to you about our approach in Mali, but safe to say we believe that the opportunity in Mali is significant if you have a plan and a strategy and how you engage with the host government. But the infrastructure is mature, it's established, so we're trying to leverage that, to our benefit. The Toubani feasibility study was released late last year. For me, again, I think it hit all the right notes. We're talking low cost, high reserves, modest capex, and competitive economics. So this is an oxide project. I'll talk a bit more about that again. Again, this is what puts us in a compelling position to move forward. But we think this project can be financed, built and repaid in relatively quick fashion, and is going to set the company up for the long term. Here's the deposit itself. We've spent a lot of time and energy redoing this resource, drilling it out. We didn't get 90% in indicated by accident. That was a deliberate strategy led by Kerry. But a 2.2 million ounce resource, 90% of that is in indicated. The weathering profile here more or less goes down 100 metres. So that green you see there, bottom right, that's the indicated. That used to be peppered with red until our drill program last year. So again, that resource underpins our strong reserves. So nearly 1.6 million ounces of reserves, I think puts that as us in the big leagues. And again, that reserve price, $1,650 an ounce gold price. So we're not a company that's going to get cute changing assumptions and inputs. We think we've got a project here and a path to bring it to life. And these are all levers we'll look at down the road, but highly economic at low gold prices. And that's what we're focused on. In that 1.56 million ounce number, 80% is what we call high margin oxide ounces that anchor this project. And the mine plan in that reserve is shown here. There's sort of 5 stages to it. Our stripping profile there is benchmarked as seen. But that stage 1A alone will repay the capex on its own. The strip in those early years is less than 2. Again, that's a deliberate focus of ours to get the capex repaid and the company marching towards free cash. Here's our production profile, 160,000 ounces a year for 10 years. This would be the 5th biggest mine in Mali once it's in production. That yellow there is the oxide. We believe we'll find more of that regionally, which I'll talk to momentarily. And that fresh rock that comes in year 7 will continue to be pushed out. So again, a substantial amount of this high margin, soft, free dig oxide ounces, which is what our strategy pivots off. Again, Toubani is a compelling low-cost project because of those oxides that we talk about. That permeates through the project, and everything I talk about here, from the reserves, the capex, the costs, it's the oxides that are our competitive advantage, we believe. And you can see where it screens here relative to some other projects going around. This was our capex estimate. This 216 million number wasn't pulled out of fresh air. It was done by Lycopodium last year. Again, this is a sizer into a ball mill. It's similar to the Bombore plant. We don't have that crushing and grinding circuit that you see for hard rock deposits. And then that's what it looks like on a capex intensity. And again, this puts us in a competitive position, which means the project has strong debt carrying capacity. And we can repay that quite rapidly. Moving forward, looking ahead for the remainder of the year here, we've got 5 value drivers. We're going to see news flow in this regard in the coming months as we move towards that final investment decision I was talking about. And Kubata, it goes without saying, will be a significant contributor to Mali. And right now we're working to finalise our agreements with the host government. Our ESHA is submitted, or should be submitted any day now. Our RAP survey work is well advanced. We're nearing completion of that. And as I referred to earlier, our debt commitment letter that we received from A2MP, we've also got an Endeavour financial process with a series of banks showing interest there. We've had an independent expert on site a couple of weeks ago. So that's also moving forward as rapidly as we can take it. It would be remiss of me if I didn't talk about our approach in Mali, just given all the headlines and some of our peers in country. In Mali, you run your own race. It's a mining country at heart. It has been for a long period of time. As a company and as a board, we made the decision very early on is what was the lowest risk approach for our shareholders and our stakeholders, and that was to adopt the new mining code as soon as possible. So we proactively engaged with Mali before they came to us because we were on a previous code and said we'll move to that code because in our view that's how you're going to have your licence to operate, your social licence to operate in that country is adapting to that latest code. And that's what we did and that's put us in a posture together where we're not talking about legacy issues or disputes. We're talking about how do we structure Kubata to bring it to life and contribute to the country. And you can imagine that would be, a dynamic free of tension and one that's, with a positive skew to it. So that's how we've approached it. Mali have 35% of this project. I welcome that. I want them to be a meaningful partner in this asset because that means they're invested in its success. And I didn't refer to it on the slide 2 or 3 there, but attributable value to Toubani on our 65% at current gold prices is 1.2 billion Aussie dollars. It's $250 million a year of cash to Toubani shareholders. So you can see the prize is enormous and you just have to strike the relationship with Mali to bring this to life, and that's what we're doing. I'll finish with exploration because there's been limited exploration regionally here through the years. We've got 2 rigs on site currently. We'll move to 3 hopefully in the coming months. And that dark red there is Kubata itself. That's had all the drilling and investment to date. But there's 50 kilometres of shears here that we need to get to work on to grow this deposit. So I'm a firm believer it'll grow. We can do 2 things at once. We can develop this asset and we can grow this project. And that's what we'll be doing. Currently, we've got a diamond drill program drilling beneath the deposit, also doing some geotechnical drilling, trying to understand what's going on because it's relatively shallow drill deposit at the moment. So we'll see what that yields, but between our oxide near surface drilling, our fresh rock drilling at depth, we're pretty excited about the future. And I'll finish here just on our timeline slide. Again, lots going on ahead of FID here by the end of the year, more or less. You should look to us to deliver these milestones. Like I've said several times here today, we're working to bring Kubata to life, and I think that bodes well for a pretty exciting future. Thanks for your time.